Okay, day three. Today will be kind of fun. Today is what I call the FU calculator, and I got the idea actually to name it that after a book from Dan Locke, I believe. I've never read the book, but I just kind of read the title and pretty much figured out what it was related to. So, um, what I created essentially is an Excel spreadsheet that would be a very simple and straightforward way to calculate how much money are you going to need in retirement. And I've broken it down, or in the article that goes along with this, I talk about security, comfort, and legacy. And so obviously the amount of money that you're going to need in each one of those phases is going to be different and different for each individual. Um, but how I actually came up with the calculator is I was going through lots of different kind of financial planners and looking for kind of a very simple way to figure out how much my commercial real estate was going to pay me and how much I was going to either need to save on a annual basis, and then based on how much money I had already. So I was kind of playing with all these variables, and I met with a gentleman actually who lives on my street, CFA, super smart guy. I think he's not a CFA yet, but he's working towards it. And I said, look, this is what I want to create. Can you help me put that together? And after a couple of meetings, he sat down and said, yeah, Shane, I can put something like that together. So I paid him and I created it. And now, initially I used to just give this out to my one-on-one clients that I work with and people that do business. But I thought, you know what? It's there, and it could probably benefit more than one person at a time. So what I'm doing now is I'm basically just letting people that want to use the spreadsheet, you can just have it and play with it. So really what's in the spreadsheet are four variables. And the variables I've kind of touched on are number one, how much money are you starting with to be able to invest, right? So I think in the example I used $250,000. Obviously, you can modify that. How much are you able to save annually? In this case, I used an example with 50,000. What return on investment are you expecting? I believe in this example, I used 10%. And then how much time do you have to retire? Is it 10 years, 15 years, 5 years? I mean, obviously, all of those variables and how you package it together is going to determine, how much money you're going to end up with. Now, you can use the calculator one of two ways. You can do it forward looking, meaning this is what I know I've got today. This is how much I'm going to be able to save, and I believe I'll be able to get 10% a year, for example. Or you can back into it, reverse engineer, and say, you know what? I want to retire in 10 years. I've got $250,000. How much do I need to save in order to hit, $150,000 a year in annual income? So you can do it one of two ways. It's really, I don't know how to describe it. It's really whatever is easiest for you to play with, right? And I say the word play with because at the end of the day, you will uh, you'll go back and forth, right? Because one of the key, two of the big variables are going to be how much time you have, and the second variable is what return are you expecting to get, right? I've got clients in Vancouver and Toronto, and they tell me, Shane, you know what? It's pretty tough to find a 6 or 7 or 8% cash on cash return. What I tell them is, you're right. Today, it does look very tight, but you're in a high growth market. And so in the next 5, 10 years, and I mean, I'm not investing in those markets, but I'm certainly looking at them saying, wow, like if I was in Toronto, for example, and I was looking at multifamily or industrial, because those are the two that I like in that market, I just see just tremendous growth. I mean, I just saw the CB Richard Ellis report that came out yesterday talking about I'm just going by memory, but I want to say multifamily was expected to go up 5 or 6%, industrial another 6%. And so when you stack that on, and I believe industrial over the past 2 years, because I've got a client that's looking at that right now, rents have gone up close to 20%. Now I could be wrong on that, but that's kind of the numbers I've heard. So, anyways, all that to say, the returns that you can achieve are really going to be based on the market you're investing in, the level of risk, the level of experience that you have, the types of properties, right? I mean, I do developments, and that's why I don't generally talk about the types of deals and the returns I'm getting, because when you're doing a development and because I'm syndicating it, meaning I'm raising money from others and I'm going out and pulling these deals off, well, the returns that I get on my investment are, one, two, three X. But that's also because I've been at it for a long time and the developments are shorter periods. So we're not really creating as much long-term wealth. Although when we execute on some of these multifamily developments, the plan is to keep them. So we will get a lift, bit of a pop, but they'll be held for legacy. So, anyways, homework today is simply just to fill out the FU calculator for your own purposes. And I was having issues with the link because it's basically it's an Excel spreadsheet that I've uploaded to Dropbox. So what I'm doing right now is just message me and I will send you it. Once I get that link figured out with my web guy, then I'll just post it in the comments or something to that effect, so you can just go directly. But in the meantime, if it's something that you want to access, just send me a message. If it's in LinkedIn or Facebook, something to that effect, just let me know, and I'll send you the link once it's live. Um, as I guess just to kind of round it off, if you are getting value out of this 30 days, I know we're only on day 3, but the only price of admission, if you want to call it that, is just to share this and make a comment. So if you're watching, if you're committed, if you're doing the work, I'd appreciate just knowing that, number one, because you know, if I don't hear from a lot of people, I'm wondering, is this valuable? But then I'll get an email or a text message or something along those lines saying, you know what, I'm getting, really appreciate it, Shane. Love it. Let me know what I can do. So, and look, I get that some people don't want to publicly make those kind of comments. If that's the case, sure, send me a direct message. I'm happy with that too. It just, the more engagement just means that I'm on the right track in terms of the type of information that is valuable. So that's it for today. We'll see you tomorrow. Tomorrow is going to be actually kind of getting into the nitty gritty of commercial real estate. I'm going to talk about terminology and some key concepts on the game of commercial real estate investing. So tomorrow we'll start to actually get into this. I know the first couple days are a little bit more fluffy, but it's important to get the foundation right. So that's it for now. Have a great day. Talk to you tomorrow.